Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. In today's episode, Anthony Power and I are pleased to welcome Sheldon Bennett, the CEO, and Stephen Eliscu, the COO of DMG Blockchain Solutions, back to the channel. They just came out with Q3 earnings. We're going to be dissecting that in today's podcast, and equally important, strategy and outlook for the remainder of the year. Before we get into it, take a second, hit the like button, guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comments section below what you thought about DMG's earnings and if you're currently holding shares. With that being said, let's get into today's podcast. Okay, guys, away we go. Another earnings interview for you. We have the team from DMG Blockchain. Q3 earnings just came out this week. We've got Stephen Eliscu, the COO, Sheldon Bennett, the CEO. A great list of questions put together, many of which are actually from the subscriber base. So thank you both, gentlemen, for making the time. Looking forward to the discussion.
Thanks for inviting us back.
Thank you.
Yeah, you're always welcome here. Now, the standard kickoff question for earnings podcast, can you talk about some of the key operational and financial highlights or top line numbers? Then we can get into some of the specifics.
Sure, certainly. So when we look at the quarter, we had 11.6 million of revenue. Other miners talk about their cash gross profit. We had 6.3 million, which was 44%. And then on an operating basis, excluding depreciation, amortization, and stock-based comp, which people often equate with EBITDA, we had 22.7 million, or 23%. And on net income line, we were about break even. And if you include our comprehensive income, which is our gains that we put on our balance sheet, we had almost a $10 million gain. And then we also had, in terms of cash flow from operations, we had $18 million. And that was in large part because we sold 15 million more of Bitcoin than we earned.
Yeah. No, I mean, I looked at the results it's when they came out, and in terms of comparison with other miners, they're actually stacks up really well. We haven't seen a miner, if you take and you actually show the unrealized valuation in Bitcoin below the line, that 10.1 million gain. Those miners that are using the FESB, if you remove that from their actual earnings, no miner made a profit up to now. We might get one tomorrow when Iron release their results, but you're so close there to break even, including the likes of depreciation, stock compensation. So overall, it's that continuation of showing that you're not the biggest operator in the mining space, but you tend to do things really, really well. From my perspective, I look at obviously the operational monthly updates, which you kindly provide. And you're in that top tier group there, the 4 or 5 miners at the top there. You're always vying for those places there. So consistent, and actually this year we've seen the consistency really take its toll, because the sort of them top 5 miners are really interchangeable week by week, and you're in that group, with the likes of CleanSpark and Iron, Right having a good year as well, and Hive Digital. So credit to you there. And also, I noticed obviously in the balance sheet won't reflect obviously where we are today, because you've made an announcement since the balance sheet. I mean, your debt in showing here is obviously showing the full amount of debt before you repay. So can you talk us through what's happened since the balance sheet to get to where you are today?
Yeah, certainly. We paid down additional debt. So we showed 12.7 million on our Signum loan balance. We subsequently paid down additional debt to get that below 10 million. This is Canadian.
Yeah.
And but what we also said is we now feel we're at let's just say, a more comfortable level in terms of debt servicing and where our capital structure should be. We feel comfortable with some debt on our balance sheet at a reasonable interest rate, which we're paying 8.5%. But we don't want that to be onerous. Of course, Sheldon and I are very cautious, just kind of given the volatility that we've seen this year. And we wanted to just get in a more comfortable position. But at the same time, if Bitcoin goes to 200K, as we talked about on the earnings call, we could still have the opportunity to pay down additional debt. And also, we talked about the fact that given at this level, we are also looking going forward for establishing a digital asset treasury. This is still in the investigation phase, but what we want is policy that will carry us in the long term for that. And we think that that is in terms of what certainly a crypto miner, but for companies at large to have crypto on their balance sheet, what the policy should look like and how that should work through the long term. Whether we have another crypto winter as the types that we've had in the past is to be determined. But Sheldon and I assume we're going to have a crypto winter and it's going to look similar to what we've seen in the past. And we want policy that will still be accumulating Bitcoin even through those times.
Yeah, I think it's important to realize, sort of this 300-400 coins. We were up over 400 for a while. The bulk of those coins were generated during the last crypto winter. So it's really been a policy of being a low-cost Bitcoin provider and just, really running our operations efficiently. And like you said, Anthony, consistency in our Bitcoin output has been very important. You don't have to be, the largest Bitcoin miner to have very efficient numbers and gain efficiencies. You can be sort of our size and just run a really strong operation. If there is another crypto winter, there's different, people saying different things because the world's changed a bit from the last crypto winter. The US has changed a lot of policy. Investors are changing in Bitcoin and other assets, digital assets. So maybe there isn't one, or maybe it's a bit different. But we're preparing ourselves like there would be one, and if there isn't, great. Good for all of us. If there is, we're ready for it. And like I say, we've done a few of these in DMG's time, and Steve and I have done a few of them previous to DMG.
In terms of the balance sheet, one thing that really stood out to me was the increase in shareholder equity over the last 9 months, 30 million Canadian dollars. And we covered at DMG yesterday when the earnings came out on our podcast, and we highlighted this fact that in terms of your net asset value ratio, it's over 200% at the moment. In fact, it's so effectively your net assets are valued at twice your market capitalization. No other miner, with the exception of Soluna, comes anywhere near that. Hive, I think, are the only other mine that has a net asset value in excess of 1 in terms of having more assets on the balance sheet, or net asset on the balance sheets, than they have as market capitalization. So, obviously kudos to achieving that. I mean, again, it probably boils down to the fact that, why is the market not, looking, at this, it's only one ratio, but why are they not paying attention to this ratio for your company? I mean, you've got very little debt on the balance sheet. You operate, really well. You just highlighted, you're not the biggest miner, but what you do really well. And some of these, these other metrics that we look at, which net asset value is a good metric for looking at valuation, it doesn't seem to be correlating with the market capitalization as well as one would expect.
Yeah, I mean, it's a great question. Steve and I discuss this internally every now and then, trying to figure out, what the disconnect is. And there's a few things that kind of jump out. One, I think we're probably the last, miner in our peer group that's not US listed. So we're only Canadian listed, and that, has an effect on retail and institutional buying. As well, when you look at most companies, before you can get a lot of institutional investors in, they want to see a stock price, at certain different levels. We've been there in the past, fallen a bit, working to get that back up. There's also, market investors are changing. A lot of people are more interested in general in AI stories. The crypto story has been successful over time, but maybe it's drying up a little bit. It's harder to find investors that want to really hear a crypto story and want to really get behind a crypto stock for the future. And we're aware of all of these things, but it's always tough to tell exactly why some stocks are doing better than others. We see, everybody sort of going up and down. We see, stocks moving in groups, depending what's going on the macro level. We kind of always sort of follow everything, but definitely we're not valued in the market the same as some of our peers.
Yeah, and I think this has been historically, we have had this discount. And as a former equity research analyst, I believe in what the markets are telling us. I think Sheldon articulated a lot of what the market is telling us. Sheldon and I do not go out there and say, pound the table as to how undervalued we are. We believe in delivering results. I think on the call we talked about our initiatives, and specifically AI is something where with the 2 megawatts of prefabricated data center infrastructure, we have indications of interest to buy. We think that's encouraging. We don't want to get too far ahead of that story, but we think there is a larger story that has the opportunity to capture a much larger interest of investors as that story plays out the way we hope.
Makes sense.
And I just one more final thing. I mean, you mentioned it, Sheldon, in your response there, the fact that you're only listed on the Canadian markets. Is there any aspiration to consider, listing on the US markets? We've seen your peer miners like Hive and Bit Digital make that move already, and we're already starting to see some benefits from doing that. Obviously, we saw Hut 8 do it last year when they merged with USBTC, and the benefits they've seen. Is it something that's is on the sort of like the agenda for consideration?
Yeah, definitely on our agenda. And we a few years ago got very serious about an uplisting to NASDAQ. We did a bunch of work on it with the lawyers, reserved our ticker. But as the market sort of softened, we pulled out from doing that. So it is a big lift to go on to a US exchange. There's a lot of things that happen in our accounting, in our operations that need to change to meet US regulatory requirements. Nothing that we're afraid of. We've actually been spending a lot of time upgrading our accounting abilities for us to run multiple legal entities better than we have in the past. So we are preparing ourselves for an eventual US listing. We're exploring, I should say, Texas as a potential place to list. As many people know, Texas is looking at opening up an exchange. There's been some communication around when that would happen and how they would be open to onboarding Canadian companies and cross-listing. Personally, I think it would be great to be a Bitcoin miner listed in Texas versus New York or NASDAQ. Operationally, maybe doesn't make sense. Maybe the more well-known boards make sense. So we're investigating both right now. But it would be nice to be, if or when the Texas exchange is up and running, it would be nice to see if that would work well for, our shareholders and a place to be in the US.
Makes sense. And we've heard there's quite a cost associated with NASDAQ uplist. Do you guys have any idea, even a ballpark you're able to share of that?
Yeah, we do. We've talked to a few companies that have uplisted, and in general, the number seems to be around $1 million that just kind of you get hit with on that first audit that you need to do, and the operational changes, the different policies and procedures you need to put into place, the consultants that need to help get this done quickly. So we kind of, you get that first hit and expect that with the new requirements that are a bit different than Canada. And then ongoing operationally, you can sort of absorb a smaller number, but it's a real number. It's not an extra few $100,000. It's significant.
Yeah. Makes sense. Hey, now we wanted to shift gears into the AI side of the conversation a little bit. You guys did a great job in our last discussion talking about serving the Canadian government, some of the sovereign data requirements, not only in Canada, but in the United States as well. Since then, we've seen a couple of your peer miners, specifically Hive with their Toronto data center, Buzz HPC, and then Iron with their Prince George facility really ramp up AI HPC in Canada, kind of validating what you guys are saying about the demand for this type of service. Can you talk to us a little bit about, since our last discussion 3 months ago, what does the landscape look like here in Canada? What's the demand you're seeing from these high value clients, and any conversation details you're able to share there?
Yeah, I think Steve and I both have opinions on this, but I'll start with mine. When we look at, the AI landscape in Canada, it's, significantly different in the US. As a Canadian, and people don't know this, Steve's an American, so we have different points of view on this. As a Canadian, I feel and see that, Canada's a bit behind the US in terms of physical infrastructure and operations and sort of the scale that the US is moving AI at. And it's in the catch-up game. And I think that catch-up game has really come out due to the sovereignty issues that have come up over the last little while between Canada and the US. In the past, I think everybody in Canada and government agencies and didn't really think a lot about where their data was, where things were being processed, or happy using U.S. firms, knowing their data was being worked with in the hands of American companies, or even American companies in Canada operating. But that's changed a lot, at least in the conversations we're having, where businesses are caring more about the privacy of data, especially company data going into AI. And they want that, in Canada, not in other countries. They want to know where it is. They want to ensure that there's third-party access to it. So there's a lot more knowledge and understanding of what's happening in the data center sector through the growth in the US and through tensions between Canada and the US. And we see that a lot in government. We've been focused a bit more in government than enterprise, and not saying that we're not interested in what's happening on the enterprise sector, sort of the way Irene and Hive have been going. But on the government side, we have a pretty clear picture from the meetings we've had what the Canadian government wants to see federally and provincially, and the concept of sovereign AI and things built and made and operated in Canada is paramount to everything that we're talking about on the AI front right now.
It's great to see what Iron and Hive have done, but they're very enterprise focused, and it's great. It's great that Hive established a relationship with a major telco. I think we see very differently. For us, getting into the government sector, for us is something we see has the opportunity to pay some really significant dividends down the road. And that, in part, this squeeze that's happening for Canada to get to its defense budget to 2% of GDP, and then ultimately to 5% of GDP, we see is really making a very strong compression to get as much built as soon as possible. And that sense of urgency is the opportunity that we're pursuing. And it's not a small opportunity. And so we're excited about the scale. We also mentioned on our earnings call about execution partners. We know, given the scale of what Canadian government and specifically defense-related sector wants to accomplish, we're going to need some friends to help us out. We believe we've lined them up such that we can be successful, and this goes all the way back to the chip vendors, not just people who construct data centers, but actually make the chips that are required. Also, another dimension is the security clearances, having partners to help us out with the security clearances. This is really hard what we're doing, but we think if we do this right, we cement a really significant long-term future in this sector and really establish ourselves as the preeminent vendor to deliver sovereign AI in Canada.
Just to add to that, when you think about, what I had said earlier, in some ways, because of the reliance of Canada in most part on the US, it's kind of a blank sheet to start. I mean, the reason, or at least one of the reasons why a Hive can partner up with a Bell is because there isn't really a lot of existing companies around that have this industry built up and operating. So the barrier to entry right now to get into AI in Canada is, I think, from what I've seen, a lot more conducive to people that understand power, have data centers, and can come in and move quickly. And so, when you see Bell, TELUS, Rogers are the big ISPs in Canada, they have their own data centers already, but I think they look at Bitcoin miners and say, well, wait a minute, our data centers are 4 megawatts. These guys are doing 100 megawatt things. It's like, who are these guys? And we need to start talking to them and figuring out how they do things. And I think that the fact that, Bitcoin miners that are operating in Canada have this experience of large power operations, and AI looks to be demanding large power to operate, there's a natural interest in what we're up to, and there's sort of an open market where the main players aren't really decided so much like they are in the US. We all know the big main players that are the hyperscalers driving AI in the US, and we know that the Bitcoin miners that operate there, on the most part, are looking to do deals with those big players. Canada, it's a little bit different. It's not quite as evolved as a market, and there's room for new names to come into a market and become big players in Canada.
I'm glad you brought that up, Sheldon, because for a lot of our viewers, they're not based in Canada and they may not grasp the relevance or the size of that Bell contract with Hive. That's similar to a Comcast or a major ISP provider in the States. I used to work at Rogers actually prior to the YouTube game here, and I know that industry fairly well. That leads perfectly into the next question, talking about scale and perhaps this unawareness of DMG's operations because of that Canadian listing or Canadian operations. But for those unaware, your Christina Lake site, very similar to what Iron has going in Prince George in terms of location in the same province, in the same country, the size, the footprint of the facility. Obviously, Iron has received a lot of attention for their facility. In terms of Christina Lake, you guys really have something of value there as well. What is your strategy or plan? Stephen, you mentioned you may need some friends or partners to help really execute on this vision, bring it to scale. What are you guys thinking for that specific asset?
So yeah, for Christina Lake, we have plans to continue operating there, growing the operations. We've requested more power from our utility, which is under progress. We'll see what number they come out with and how that works. As we've stated many times, our main sub is 85 megawatts. We engineered it when we first installed to be twinned to add another 85 megawatts, both for redundancy, but also for expanded growth. We're looking at acquiring more property based on the fact that, we see AI, although, the density can be quite compact. We do want to have the space around to have multiple buildings that are, newly built, spaced apart for our management of our AI growth over time. It will take space. We do have 33 acres, but a big chunk of that is taken by our existing crypto mining operations. So we're looking at both increasing the space that we would need to put in significant AI operations there. We're looking at getting additional land in that area. We've been looking at, actually already looked at a second fiber source. When I say fiber, internet. And so definitely work is being done on how we can transition that site into a very large AI site. We think the location is good from the point of view that it's close to the US, close to major internet hubs. Obviously, we've been very fortunate working there. It's turned out to be a very cash flow, high yielding property for us. And we think that AI can be the same there. So we have a lot of plans to keep developing it. So in the back of that, if the question comes up, what happens to Bitcoin mining at Christina Lake? We don't really see that disappearing. We would probably see it tailoring off or stabilizing, depending on what happens the next halvening and the halvening after that. But definitely when we look at future builds, we really do look at a return on the power. We kind of do our math around what is the profitability running an AI operation versus a crypto operation. What's our ROI, and what can we do to maximize shareholder value in anything we do.
And as a reminder, we have 15 megawatts right now of firm power from our utility, and we're working closely with our utility to be able to get more firm power that would support AI over time.
It's interesting, Sheldon, you mentioned about the Bitcoin mine, because that was going to be sort of my next question. We've noticed many of your peer miners have already sort of like now stopped increasing their miners in their portfolio and basically focusing all relevant power towards HPC. We used to have pure play miners out, and it looks like every pure play miner now has jumped on the HPC bandwagon in recent weeks, and now all eyes focus on delivering HPC. In your last time we spoke, and I think it was in your latest presentation, you have an aspiration to get to 3 exahash. Are you implying now that that might be on hold whilst you determine what the best return is? And also, for something that's untested at the moment, providing a HPC service requires a significant amount of investment. Without really knowing the life cycle of GPUs fully, are we sure it's going to deliver the sort of revenues and margins that we've been able to achieve through Bitcoin mining in your previous experience?
So two great questions. One, we don't see ourselves stopping our plans for growth in Bitcoin mining. And they're modest plans. The timeline of when we hit them may change a bit, but we've sort of said that we have this plan to get up to 3 exahash by the end of the year, the calendar year, and we haven't really changed that plan. We've talked a bit about delaying it, and as we said publicly, that would sort of be based on machines and machine availability and what Bitmain and a few others are up to. We are committed to continuing hydro as our future machine of choice, and that's going to take a little bit of retooling of the building itself. Right now, our hydro runs outside in hydro containers with dry coolers. We've procured dry coolers and some equipment to start converting inside our building to hydro, and that'll be sort of the future of the building. It'll be converted over to a hydro mining facility, so that over time, all of our operations would be hydro. And this is, significant for a few reasons. One, the hydros do run better. We have found that through our data, especially in the heat of the summer, but they're very reliable, less repairs and maintenance. But also that hydro experience is sort of what's going to happen with AI in the future. Is we really see, and everything we're hearing from people that we talk to in Canada that want AI data centers, they want a hydro-enabled AI data centers. So they're not really interested in air-cooled chips. There's still a market for that. There's still others that do want that. But I think hydro is the future of high-performance compute and the future of stable, reliable operations in Bitcoin mining. We don't see that Bitcoin mining stopping. As I commented, I think the halvings will tell a lot. I think where the network difficulty is at, what the price of Bitcoin is at, will dictate, whether or not more investment goes into continuing Bitcoin mining and at what scale. As we know, and everybody in the Bitcoin industry knows, capital markets are not exactly excited about expanding Bitcoin hashing operations. They're interested in AI. That's sort of where the funds are looking for growth and looking for innovation, and they're looking at companies that can get into that market and show a good value in how they're going to build out AI for the future. So we're aware of that. Obviously, we believe we can come in and get into this business in a competitive way. We have a few different tools to do that. As you guys have heard about a few times, one of them is working with the Malahat. This gives us some advantages on financial advantages and operational advantages. So, we're definitely going to be using that. And the Malahat has proven to be a great partner. And all of our contract negotiations and site preparations and discussions are going well with them. So we think we're on the right track. Saying that we're just going to stop Bitcoin mining wouldn't really make any sense. Bitcoin mining, although it may have fallen out of favor from some investment sides of the market, it does generate a lot of cash. It has a faster ROI than AI. AI is very capital intensive. There's a lot of depreciation. It takes a longer to get your ROI out of it. But the numbers can be better in AI. And, Steve spends his time sort of looking at the numbers, and we kind of look at our site, our planned new site in Canada, and a few other things that we're doing. And, obviously, number one on the list is to have a significant AI operation up and running as soon as possible. Number two is to ensure that we are financially viable by having a very profitable Bitcoin mining operation. And number three is to continue to support systemic trust in the digital asset side of our business.
Yeah, and I think what we've said with regards to Bitcoin mining is that we want it to remain competitive. So to continually layer on new generation equipment, retire old generation equipment, and just keep it competitive so it supports the rest of what we're trying to build. We've set 3 exahash as a target because we think it's reasonable. It would be the addition of taking one of our 12 megawatt tranches in our Christina Lake building and converting it to hydro. But Anthony, to go to your question about GPUs and kind of some thoughts on that, just to give you some food for thought, if you look at a $50,000 GPU and just depreciate it over 3 years, you have to get the depreciation is about $2 per hour for that GPU. So you have to get, let's say, $3 to $3.50 of revenue per GPU hour with, let's say, about 80% utilization, and energy costs being a couple percent of your overall costs. It ends up being that a good business there, if you can get that $3 to $3.50 per GPU hour, it ends up being somewhere like a 20% operating margin business. And that's kind of how we look at the business, is can it essentially be a 20% operating margin business? That's our aspiration in Bitcoin mining as well. As you know, that's a challenge for the entire market to hit those type of numbers. But if you just kind of frame any of these businesses in that framework, I think you kind of can get some clarity in terms of, is this a good business? Can it be better than Bitcoin mining? Time will tell.
Yeah. I was just going to refer, with some of the miners, what we call previous Bitcoin miners, moving to the high performance compute space and basically looking to maybe offload their mining businesses. Is there an interest in a sort of secondary market for machines maybe becoming available at a cheaper price, thereby giving you an even quicker return on investment to grow that? But it sounds like you're already looking at maybe using the hydro, and that may not fit with some of the machines that are out there at the moment. But I mean, I know we've had discussion with some of the CEOs, and they're certainly keen to maybe look at removing Bitcoin mining and focusing on HPC, which, in fairness, a lot of mining CEOs, execs are doing. From now on, it's not many are growing hash rate. Most of them are maintaining hash rate because, like you say, Sheldon, great cash flow whilst you're growing the HPC business. And then start getting your return on there, as Steve explained, utilising that 80% figure to get a reasonable operating margin.
One of the issues you're going to see the CEO saying why they're going to AI versus HPC, versus Bitcoin, is the capital markets. I mean, traditionally, if you have 100 megawatts and you want to refresh your fleet, most crypto mining companies don't have the cash. They don't have $1 million or $2 million a megawatt sitting there to buy those fleets. So they go to the public markets, and that's traditionally how they've done this for their growth. If you want to go to the public markets now and refresh, at $1 or $2 million a megawatt and get $100,000 to $200,000 or $100 to $200 million, I think you would find it a tough time talking to investors and funds out there to get that money. Whereas if you said, I want to do 100 megawatts of HPC and it's going to cost me 10x that or 20x that, I think you'd have a lot of calls lined up. That's sort of what you're kind of seeing in the background, is that, the conversations to get the capital, unless you've got the money or you've got the debt facility, you've got something already lined up, it's going to be a tough conversation. So if you are a multi, 100, 200, 300, 400 megawatt Bitcoin miner with a halving coming in a few years, I'm pretty sure they're busy either figuring out where that money is going to come from, saving as much as they can, or figuring out how to get into AI where they can get, the capital they need to really invest into converting over to AI in their operations.
Hey, speaking of AI, I know you just mentioned you've got 15 megawatts of what's considered firm power at Christina Lake. You have a 30 megawatt agreement with the Malahat as well. And I know last time we chatted, the plan was to structure that in, I guess, kind of 15 megawatts on their location, 15 megawatts with DMG. Have you determined which of the two will be first in terms of planning, execution, construction?
Yeah, it would be the DMG side. It's just much easier. We already have our own substation. We have our mid level distribution network. We have the property and plans to get more property. Definitely easier for us to turn on 15 megawatts in Christina Lake before Malahat. Malahat has already provisioned the land, the space, some power. They're working on getting more power, which we're assisting them with. So they'll take a little bit longer. Just they don't have the infrastructure build out. And 15 megawatts of infrastructure on Vancouver Island is not common to find. So it's not like there's a lot of power there. BC Hydro is the utility there. They import the bulk of the power. There's a lot of power generation on the island. So yeah, definitely number two will be Malahat. That's not to say that we won't do things in parallel. They may have a few megawatts running there, but we'll be able to reach our goal in Christina Lake before Malahat can.
Great. And then another follow-up there in terms of timeline. I know you guys have opted for the prefabricated units. I believe you've procured 2 megawatts out of the potential 10. When can we start seeing when would be the kickoff or start date for the Christina Lake location, if that's going to be the first one? And how will we structure the build out of these additional units? Will we continue to see 2 megawatts at a time, or have you guys discussed that at all?
So another great question. The goal is to actually move the 2 megawatts, one to Christina Lake, one to Malahat. This is why I was saying they won't be proportional in how we grow them. However, those conversations change. There is a chance that a government agency will take those 2 and move them to a location they want them at. And so we're busy negotiating that right now. There's also a chance the additional 8 megawatts may be taken by government, which would be great. There's Not that we're focused as much in enterprise, but there's a chance that the 8 megawatts may be taken by an enterprise client that we're discussing with as well. The 10 megawatts will be taken up by somebody. We're not really finding it hard to get interest. We're really focused on government interest. We really want to become a provider of choice to them. And because these can be deployed quickly and they can be up and running quite quickly, we think that, government, as slow and bureaucratic as they are, I think that they're trying to figure out how they can work through the procurement channels, meet the requirements that our Prime Minister is giving on sovereign AI for the provinces and federally. We have a lot of discussions around how we can speed things up. If we can't speed them up, and if we find that the procurement process in Canada, regardless of what the Liberal Party wants to do, gets bogged down, that's not going to stop us from deploying with a partner in industry on the enterprise side. And so, we're definitely going to figure out how to get these things deployed with a long-term client. We really want that client to be government, specifically military, just because these actual prefabricated units are skip rated, so they are made like a Faraday cage. They're made for the military. The ones we have are made for the U.S. military, and so definitely that's our first choice. But if that doesn't work, it doesn't mean there aren't others that would be happy to have equipment in them and running. So that's the plan. And just to close out this, 2 versus 8, we did buy the 2, so we had assurances on that. The other 8 megawatts, we are working on, a path to purchasing them as well. And I don't think that path will be too long from now. I think that we have a partner that's supplying this equipment to us. We've known them for a long time. We get along really well. We have weekly calls with them on, what's the best way to move forward. So I'm sure that we'll figure that out quickly. I don't know if Stephen has additional comments.
No, that's great. I mean, yeah, we don't own the other 8 megawatts, but we're working towards that.
Awesome. Now, just switching away to another venture that you're heavily involved in. Obviously, you've recently relaunched the Blockseer Explorer. Can you talk about usage levels and potential revenue from this technology and how you see it develop over the next 6 to 12 months?
Yeah, I mean, that's a project dear to me. We purchased Blockseer when we went public back in 2018. At the time when we purchased it, it had around 8,000 users, the bulk of them in law enforcement. We ran that for a few years. We added on Wallet Score, which did risk ratings on wallets for transactions. And then we took it offline. A lot of competition came in. We focused it more on the pool and our clean block mining, what we were doing, where we were able to pull out transactions from the block template for Bitcoin mining blocks we focused on OFAC, but we could focus on anything. It could be gambling, it could be terrorism. It doesn't matter what it is. We have those transactions. And we've been focusing on that for a while. And, other companies have sort of filled that gap of giving a block explorer that was, you could just go in, make an account and use it freely. When we found out that there was really no free block explorers anymore, they were all paywalled and ours was sort of sitting there. There is a cost to giving stuff out for free. We decided to re-release it. It's a little bit different than the original version. We didn't release it with the graphical interface. We have a schedule of upgrades that we're going to do to it, and eventually we'll bring back the graphical interface. This is for those of you that have seen it before in the past. You could put in a wallet address. It would create a block of that wallet, tell you how much Bitcoin it is, but then it would have you all the transactions that fed into that block and all the ones that went out of it. And then you could just follow those arrows and click on another wallet, and you could follow everything, and it would break out and it would show you all the transactions. And so it's very useful to follow Bitcoin graphically and follow the wallets. And as a miner, you could see your payment, but you could go back to the block that was won from the pool, and from that pool payment going out, you could see every miner that got paid. Now you'd have to know their wallet address, know who they are, but you could see the amounts, and you could, if you had data like us, you would know who was who. So we've done it just textual, so you can put in a block, a transaction ID or a block, and you'll get all the data on it. There's a few other things that we plan on adding to it over time. We've made it so you can do batches. This is something actually Stephen really wanted, so you could put in a batch of addresses. It makes it easier for people tracking wallets. And we've internally put in a sort of path of upgrading what we want to do, and we'll keep adding more features to it. There is discussion about some features that are more expensive for us to provide, about putting a paywall on some of them and collecting a little bit of money to cover those costs. But we don't really see it as a revenue generating product. It's not like a Chainalysis type product that we see having a big paywall and a big fees for. We see it as something to, any Bitcoin miner or enthusiast can use freely and get data. We do see it sort of plugging into, if you're using our pool, you can track and trace your wallets quite easily. If you're an STC client, you'll have access to everything as well, where you can see all the transactions quite easily. And so we just kind of see it as something that, adds to other products to make them more interesting and usable. And just on user base, we've been giving out in beta for free, and, steadily more and more people are signing up and using it. So we're just kind of seeing every day a few more people sign up as they find out about it and use it. But we haven't done a big sort of marketing campaign. We haven't reached out to the 8,000 previous users and said, hey, guess what? Here's your account, go use it again. But those are things we want to do. We just want to make sure that we're balancing the infrastructure that manages it to the amount of requests, so that we don't have a disconnect and it runs smoothly.
It sounds like it's an opportunity for government, law enforcement, tax bodies looking to sort of trace transactions, because we're all about making sure, the governance of the blockchain is kept there, and you've got a source of actual following the trail there. And, it might not be to the ordinary retail person, but actually to a lot of agencies, this is exactly probably what they're looking for. And you're right, maybe not financially driven, but actually profiling DMG blockchain in terms of creating this and providing it as a service.
Yeah, in the past, we did work with law enforcement on some cases, where they would hire us to investigate in more detail some of these transactions. We've been out of that for a long time. There are other companies that specialize in that. But, we just saw this as something we had that was used by us, could easily be used by others, was low cost to give out, shows our profile a bit better as a company. We've sort of talked about, DMG and not a lot of people knowing about our company. So this is just, a tool that will help. But yeah, on law enforcement using it, great. We don't have labels that we're giving out, so you would have to work with a company that would provide those. Would we do it in the future? Maybe. We'll see how things go. But right now, it's just there's no labeling involved. It's just a Bitcoin wallet addresses and transactions.
And investors should also just look to this as an example how our development team in a very short time can just pull code together, leveraging all the latest AI tools, and really put something world-class out there. With, as Sheldon was saying, there is really no free block explorer with downloadable reports available anymore. There used to be. And we wanted to provide that to the Bitcoin community. And it raises our profile, potentially becomes an upsell opportunity to our custody platform, Systemic Trust. And we're excited that, as Shelley and I, both around during the acquisition of Blockseer, this is near and dear to us to kind of get this back front and center back into the community.
Yeah, I think people will be happy. I mean, everybody that loves something free, so I think they'll be happy to use it. So if you have a chance, go take a look at your Bitcoin wallets and stick them in there and see how it works.
There you go. See where the Bitcoin's coming from. No, it's a great product and a nice segue to kind of our closing point here. We've covered a lot of ground, everything from the HPC AI, the Malahat, obviously the self-mining growth, the hydro equipment, the Blockseer. With so much going on at DMG, in your mind, what is the most immediate revenue opportunity for investors, or which one of these opportunities are you most excited from in terms of a profitability revenue standpoint?
Yeah, well, I think hands down it'll be AI. It's really where the market wants everybody to go. Revenues are strong in AI. I think there's a lot of new models of how it's going to work. Stephen went on about, to be very careful about depreciation. That's always been a killer for Bitcoin miners. We've had to deal with that forever. I mean, that's the biggest issue we have on trying to pull a profitable financial statement out. So, we're definitely, spending the bulk of our time on working towards an AI deal that we can get out and announce to our shareholders. We're not, slowing down or stopping or pausing what we've said on Bitcoin. And we're definitely putting the time into STC. We believe that as I would say the world, but maybe that's too broad, but as North America, where we operate, is becoming more and more digital as the Trump administration is doing very favorable things to the digital economy. We just, looking at the uptake of how many more people are getting wallet addresses, getting interested in crypto, looking at crypto as a store of value where they would not normally do with their mutual funds or 401ks. And we just think that is a market just starting, and STC is entering that market at the right time. It's going to take a little while for us to win clients as a new entry. It's going to take a bit of work to do that. But, we feel as though, DMG has a great background. It's one of the longest sort of public companies in crypto. We know a lot about it. We know how to manage it. We know how it works. We know the security issues. We know all sorts of stuff. We have lots of experience with it. And we think that that's really going to help STC capture clients and grow its business.
Great. Hey, well, we look forward to seeing these announcements as they come. Obviously, the HPC AI, a lot of eyes and ears on that sector right now, but there's a ton of catalysts on the horizon for DMG. We appreciate you guys walking through that along with your Q3 results. If you have any additional questions for the team, leave them in the comment section below. Hit the like button. Feel free to subscribe. Gentlemen, we'll see you back here soon.